It's Friday, the 9th of July, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Financial markets start to waver as the number of new COVID cases in New South Wales surge. That's our main story. Also coming up in today's podcast, Crown Chair Helen Coonan under fire in the Victorian Royal Commission, and the casino giant is accused of interfering with the outcome of the inquiry. Reserve Bank Governor Philip Lowe gives a lesson on employment, and how golf, yes golf, has made a comeback among millennials. Then, stay listening for my chat to Michael Sullivan, Executive Chairman of Bluebet, which listed last week and wants to take on the US gaming market. But first, here's a brief look at markets. Wall Street fell overnight, with economically sensitive stocks dropping most, as investors worried about the latest wave of COVID-19 hurting global growth. The Dow Jones Industrial Average and S&P 500 were both off 1%, while the Nasdaq was 0.7% lower. The US 10-year bond yield fell back to 1.276%, its lowest since February. European markets also tumbled, with London's FTSE falling 1.7% and the Stoxx Europe 600 off 1.8%. Again, the primary reason for the tumble revolved around COVID and what it means for growth. The local share market edged higher yesterday, up 0.2%, to finish at 7,341 points. Technology stocks and consumer staples again led the way, with utilities and energy companies underperforming. Among the large caps, BHP was a strong performer, up 1.8%. The price of iron ore is still trading around $220 a tonne, supporting the big miners. Woolworths also did well, up 1.7%. Afterpay jumped 3.3%, while Sydney Airport rose 2.9%. Media reports yesterday suggested Macquarie Group was interested in putting together a counterbid for the asset after Tuesday's $22 billion offer from a group of infrastructure investors. Oil prices halted their slide overnight and rose about 1%. Gold prices fell back below $1,800 an ounce, and the Aussie dollar is trading at 74.3 US cents. The COVID crisis in New South Wales escalated yesterday with a surge in cases, and State Premier Gladys Berejiklian backing away from suggestions the lockdown would end late next week. The outbreak of the highly infectious Delta strain across southwestern Sydney ensured case numbers rose, and medical experts said the current lockdown must remain for as long as there were significant new cases in the community. What's worrying authorities is that many of the people who have contracted the coronavirus were not in isolation. 40 people are currently in hospital as a result of the outbreak, with 11 in intensive care. Prime Minister Scott Morrison announced a range of new measures to help New South Wales, including additional vaccines, a change in guidance so that the second dose of AstraZeneca could be delivered at 8 weeks, not 12 weeks, and financial support for workers. Medical advice says the second dose should be taken 8 to 12 weeks after the first, and when cases surged in the UK, regulators brought forward the second dose. This morning, the Australian newspaper is also reporting that the federal government has done a deal with Pfizer to triple the number of weekly doses of vaccine available from July 19. The less than full lockdown covering Sydney at the moment has come under fire. If you want to lock down a city, why allow discretionary retailers to stay open? The risk now is that the lockdown, which no one wants, could last longer, according to medical experts. The Sydney lockdown is already having big consequences for the economy and financial markets. COVID stocks on the share market, like the tech companies and the big supermarkets, are doing better. 10-year bond yields have fallen from 1.8% a few months ago to 1.3%, suggesting that traders aren't quite as convinced about the Reserve Bank loosening monetary policy. The state of New South Wales is on a knife's edge. Things could go either way. The moral of the tale, no matter where you live in Australia, get vaccinated. In a moment, the rest of the news you need to know this morning. In overseas news, the global death toll from coronavirus passed 4 million overnight. While it took 9 months for the first million lives to be lost, it took just 11 weeks for the most recent million. The Tokyo Olympics will ban all spectators as the resurgence in cases of COVID-19 caused the government to declare a state of emergency in the city. Some events taking place outside Tokyo will have limited spectators. COVID cases have been rising in Japan and on Tuesday hit their highest daily level since May. China is set to launch its first passenger jet after a decade of development and tens of billions of dollars worth of state spending. According to the Financial Times, the single-aisle C919 will commence commercial flights shortly, providing a deep-pocketed competitor to Boeing and Airbus. And the son of Rupert Murdoch, James, and his wife Catherine have committed to a $250 million climate finance fund, which targets emerging markets. The fund, run by BlackRock, has committed to investing in green energy infrastructure. James clearly is a little greener than his father. Locally, Chair of Crown Resorts Helen Coonan yesterday appeared before the Victorian Royal Commission. She admitted that the group's compliance with responsible service of gambling requirements needed work, and a man banned from the Melbourne casino subsequently visited the sister operation in Perth 29 times. Ms Coonan knew about the alleged underpayment of taxes of up to $270 million as far back as February, but didn't seek much more information about it. She did say that any tax owed would be paid back to the government. She also said that the old Crown, which was run by people linked to major shareholder James Packer, was in control until January this year. That's about the time when the Bergen inquiry recommended that Crown not get a gaming licence in New South Wales. Ms Coonan also stood by the under-fired chief executive of the Melbourne casino, Xavier Walsh. Commissioner Ray Finkelstein asked Ms Coonan whether Crown could be easily broken up, not something a chair of a listed company wants to hear from a judge. But perhaps the most damning outcome of the day was Ms Coonan conceding that the board of the group wrote a letter to the Victorian government just last week, hoping to neutralise the findings of the commission. The letter said it was not in the public interest for Crown to fail, something she reaffirmed yesterday. But Commissioner Finkelstein was not impressed and said the letter amounted to Crown warning the government to make sure he didn't make a specific finding, presumably that Crown should lose its licence in Melbourne. Diplomacy has never been Crown's strong suit, but the letter is a shocker. Tough day in the office for the former federal senator. Reserve Bank Governor Philip Lowe was speaking virtually to a Brisbane audience yesterday. He reiterated the Reserve Bank's view that the recovery in the labour market had been remarkable and employment was now 1% above its pre-pandemic level. While the jobs growth was a surprise, there wasn't a similar increase in wages and prices, and that's what the Reserve Bank is looking for. Slow rises in wages have been occurring for a while, and Dr. Lowe put it down to supply-side factors: rising labour force participation, particularly among women and older workers, the ability of local firms to tap into overseas labour markets, and a trend rise in underemployment. If you overlay those supply-side factors with the laser-like focus on cost control among Australian businesses over the past decade, you get relatively low wages growth, Dr. Lowe said. Maybe I'm slightly nerdish, but if you're interested in the labour market, go to rba.gov.au and have a read. It's fascinating and will be a welcome addition to the debate around immigration in this country. Zipco's share price jumped 14% yesterday. There was no announcement, but there were media reports that a strategic investor was looking at the buy now, pay later group, with Klarna speculated to be the most likely. The strategic investor has a 4% stake in Zipco. Klarna, along with Zipco, Afterpay and the US-listed Affirm, is one of the biggest players in the world. US gaming giant Scientific Games is considering the ASX to launch its $5 billion initial public offering of its global lotteries business, according to the Financial Review. Scientific has been in talks with local investment banks. Why Australia? Because the US market is relatively new to online gaming. Only in the last couple of years have rules changed that allowed it in the world's biggest economy. In Australia, it's commonplace. Both PointsBet and Bluebet are listed on the ASX, but growing their businesses in the US. So, Scientific Games might end up finding a more appreciative investor audience down under. Seven Group now has more than 40% of Boral, having spent around $440 million extending its stake in the building materials group. The deadline for the $7.40 a share offer is next Thursday. Boral's board has rejected the bid, which was done at a less than 15% premium to its trading price ahead of the offer. Looks like Seven Group and its boss Ryan Stokes will end up with the most influence in the company. AMP Capital's global equities and fixed income business has been sold to Macquarie Asset Management for $185 million. AMP said a review of the business showed it had strong capabilities in global listed equities and fixed income, but needed greater scale. That's what Macquarie brings to the party. Billionaire Solomon Lew yesterday called for the resignation of 3 Myer non-executive directors, including the acting chair Joanne Stevenson. Mr. Lowe said $760 million of shareholder value had been destroyed under their watch. Mr. Lowe's Premier Investments now owns more than 15% of the department store, and you can be guaranteed the sniping will continue. Outdoor ad agency O Media will sell its youth publishing business, Junkie Media, in the second half of the year, preferring to stick to its core business. O Media bought the business 5 years ago as part of its digital strategy to align mobile, social and billboard advertising. Macadamia farmer Rural Funds Group will go to the market to raise $100 million to invest in more orchards. It hopes to plant hundreds of hectares of new macadamia crops this calendar year. The funds will also be used for the group's cattle operations, which seems about as far away from macadamias as possible. And there's a great story in the New York Times about golf. It's well worth a read and close to my heart because I have several children who, during lockdowns, have discovered the sport. Golf may have one of the richest traditions in sport, but it's also got the reputation for being dominated by old white blokes. 1,600 courses across the US closed over the past 10 years. But the last 3 years have seen a turnaround. 6 and 12-hole courses reduce the time taken to play and the cost, and also the need for land. The average age of players has dropped dramatically, with many female participants. There are sports bars at driving ranges, loud music on courses, and the etiquette of the sport has been relaxed. Apparently, it's hip again. Maybe I can drag out the +4s. Up next is the Daily Interview, and my guest today is Michael Sullivan, founder and executive chairman of corporate bookmaker Bluebet. Bluebet listed on the ASX this time last week, and Michael has his eyes firmly on expansion to the US. It's a fascinating conversation. I've spoken on a number of occasions about the boom in betting stocks because of law changes in the United States. Michael explains what those changes actually mean, and he's remarkably candid about how he's going to crack the American market. That's up next in the Fear and Greed playlist. Find it wherever you listen to podcasts or at fearandgreed.com.au. It's Friday, the 9th of July, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.